So let's see how the Forex market will unfold. We have the euro versus the dollar completing a bearish crab pattern at 109.13. I will expect a retracement towards the Fibonacci retracement levels, which lies below 107.65, 106.53 and 105.62. That's the previous fractal resistance and weekly fractal resistance level. But as I said, we always rely on the default targets for those patterns. So we have a 38% Fibonacci retracement level, 106.53. That's a default target for that crab pattern completed for the fiber. We have also the cable nearing the bearish alt-bat pattern completion point at 129.03, 61.8% Fibonacci retracement. We are now threatening the support of a lower degree ascending wedge. Pay attention to the eventual breakout or break below the support level. If that happens, it may trigger the expected retracement for the cable after this big move to the upside, this momentum to the upside. If the price breaks higher, we have the next level of resistance at 131.47, the 78% Fibonacci retracement level, and eventually the bearish crab pattern projected at the golden Fibonacci extension. For now, we're still nearing this bearish alt-bat pattern, as I said before. Nothing specifically for the Aussie or the Kiwi. We are unfolding into a potential flag pattern. We have some variables that may guide me into a bullish Gartley pattern projected at 61.27. We are very far away from those levels, and a lot of things may happen during this process to the downside. For now, we have support at 62.60. If the price breaks below these levels of support, I will start to pay attention to this potential Gartley pattern. For now, we have no clue of what will happen for the Aussie or the Kiwi, at least for now. Something that can happen on both, it's to trade higher above the resistance levels. We have the weekly fractal resistance at 57.72 for the Kiwi. If the price breaks above these levels, I will anticipate a move to the upside and the formation of a potential bearish crab pattern. Again, another eventual crab at the golden Fibonacci extension level. Let's see how the market unfolds. For now, there's no clear picture for the Kiwi or for the Aussie. The Swiss franc, the dollar versus the Swiss franc, we have a bullish crab pattern completed last week at 88.21, 61.8% Fibonacci extension level. We have targets or default targets for that pattern at 38% Fibonacci level, 89.26. That's the default target for that pattern specifically. Attention to this potential structure. If the price breaks below the support level, it may trigger more momentum to the downside in this case. So pay attention also to this eventual bearish flag pattern unfolding for the Swiss franc, and this will always depend the gold and the silver markets. Not always, by the way, but usually depends on the dollar behavior. We have gold approaching the weekly fractal resistance at 29.56. Actually, we are threatening the violation of a recent structure resistance. And if the price breaks above the resistance, we can anticipate multiple patterns. One of them, and the most, the one that I'm paying attention to at this point is the bearish butterfly pattern, 29.90. I posted this. I believe I posted this chart on Twitter this week, and also the eventual crab pattern if extended to the golden Fibonacci level. I will pay attention to initially. I will pay attention to the butterfly pattern, which may force a retest of this resistance level. Basically, the retest of these most recent fractals broken at 29.29. So we have the daily fractal resistance right there, nailing the 38% Fibonacci retracement level. So pay attention to this eventual pullback or the formation of the butterfly pattern and the pullback on gold. The same may happen for silver, of course, we will pay attention to the formation of the bearish butterfly pattern at 33.86, and actually both patterns may form. So we may see the price reacting to the 127% Fibonacci extension, completing the butterfly pattern, and then if the price trades higher and approaches the weekly fractal, will also unfold and complete the bearish crab pattern at 34.69. So pay attention to both of these levels, 127, 33.86, and the 161.8 at 34.74 gold. We have also crude oil unfolding into a potential double bottom. Attention to this resistance at 68.37. That's the fractal resistance and the neckline for this potential double bottom for crude oil. And be careful with your expectations also, because we have default targets for that pattern at $69.68, nothing more than that. This is a potential reversal behavior, and the price may confirm that sooner or later, but we rely on default targets. When we push a specific trade, we rely on a specific price zone, a specific price where I say, okay, this is a default target for that specific pattern, that's the target zone that I will rely on. So basically that's my my reward or my default reward for this specific move. We are talking about a 1.9% move above the resistance. So don't create false expectations and start to put your targets, oh, the market will trade a 50% Fibonacci retracement. I need a reason for that. Of course, you can have multiple fundamental reasons to point to the 50, to the 70, to the $80 a barrel. You can find multiple fundamental reasons, but you always need a technical pattern to push your trade. And if you trade a technical pattern, you need to rely on those targets by default. So double bottom, neckline 68.37, target at 69.70, let's say, or $70 a barrel. That's your default target for this potential move for the crude oil. Moving forward, SPX 500, 224% Fibonacci extension, 56.11, completed the bullish sharp pattern at 224% Fibonacci extension. So I will expect a move or an attempt to recover from this price zone. We have default targets for that pattern already adjusted to the recent lows at 58.41. That's equivalent to a 50% Fibonacci retracement for the SPX 500. The same may happen for the German DAX, which is threatening or reinforcing the previous levels of support. I need to reduce or decrease my time frame to show you my expectations for the German DAX. I have a resistance at 22,843, the most recent fractal resistance for the German DAX. That's the neckline for an inverted or eventual inverted head and shoulders pattern. If the price finds a way to break above the resistance, we may anticipate a move to the upside. If that happens, there are at least two levels that I will pay attention to: golden Fibonacci extension and of course the 200% Fibonacci extension level, which is the default target for the inverted edge and shoulders. So basically we have a cluster between the golden Fibonacci extension, the 200% Fibonacci level, which is, as I said, the default target for the pattern, and also the convergence with the 78% Fibonacci retracement level. So if the price approaches these levels, I may anticipate, and I need to observe how the market will react from there, but I may anticipate a move or another pullback. And on a on a higher time frame perspectives or analysis, you can also anticipate these or as a potential edge and shoulders pattern formation starting to unfold or starting to form the right shoulder for that pattern. If the DAX reinforces this level of support as it looks like, it may trade higher. At some point the price will approach the previous highs from the left shoulder, and we start to imagine the possibility for the edge and shoulders to unfold for the German DAX. So let's observe how the market will unfold also, but for now we are focused on this neckline for the German DAX. Of course, I don't need to reinforce this idea. If the price breaks below the levels of support, it will invalidate that sequence or that possibility for that pattern to unfold and may trigger more momentum to the downside. Now let's finish with the 10 years, the dollar, the United States 10 years bonds. We have also a technical double top, and we have a neckline at 110.12. So basically we are paying attention to this neckline. If the price breaks below these levels, I'm anticipating a move towards 109. Basically we have a 61.8% Fibonacci retracement right below, so pay attention to this possibility also for the bond. And the Dixie, as I said multiple times, I projected and I shared this pattern before on Twitter. I have a crab pattern below at 102.46. I'm waiting for that pattern to complete at the golden Fibonacci extension for the dollar, so which implies of course more momentum to the downside. But pay attention to this lower degree descending wedge eventually unfolding into a 3 drives pattern formation. A new lower low will not be a surprise for the Dixie, and if that happens in divergence, we have already signs of divergence. This is something for a higher time frame structure, but we have already divergence for the dollar, but even though if the price trades prints a new lower low, it may print the 3 drives pattern formation, and that may trigger an attempt to recover, eventually move to the downside, a retest or a reinforcement of the support of this channel, and eventually a move towards the previous highs again. So this is a lower degree event. We are not we are not considering a reversal price behavior, taking into consideration this pattern, but the 3 drives pattern may trigger a move to the highs or the first highs of the pattern, 104, 104.05, 104. That's the default expectation if the price unfolds into that specific 3 drives pattern formation. This is a lower, as I said, this is a lower time frame event. On a higher time frame, or a higher degree, or a mid long-term perspectives, I'm waiting for more downside momentum for the Dixie. Even if the price unfolds into that pattern, we may see then later the crab pattern completed at the golden Fibonacci extension level. So pay attention to the Dixie, and of course the related and inverted correlations between all the other pairs that I showed you before. That's all for today. I hope you have a nice trading week. Stay tuned, and I hope to see you in the next video.